Welcome to the deep dive, where we sift through the noise, stack up the research, and pull out the essential insights you need to be truly well-informed. Today, we're plunging headfirst into a truly fascinating intersection of crypto and mainstream finance. We're talking about stablecoins. Specifically, we're focusing on the company Circle, which trades under the ticker CRCL. Our insights today are distilled from a really detailed analysis we found on the One More Money blog, their article, CRCL Stock Analysis, Can You Buy Circle Now? It's packed with crucial information about Circle's recent IPO, its business model, and, well, what it all could mean for you and your understanding of this market. Circle's IPO was quite a moment, wasn't it?
Absolutely. A landmark event.
Yeah, it's the first publicly traded company rooted in stablecoin issuance. Feels like a brand new era for digital assets, maybe. So the big question the One More Money blog tackles, and the one we're going to thoroughly unpack, is this. Is Circle stock, CRCL, a good investment right now? Let's dive in.
Okay, let's unpack this IPO story first. The One More Money blog really highlights how Circle's public debut on June 5th, 2025 captured a lot of attention.
It certainly made an initial splash.
Didn't it just? Priced at $31, the shares absolutely soared to $83 on day one. That's an explosive, 168% gain?
Pretty incredible debut.
Right. And this IPO ultimately raised over $1 billion. Yeah. The One More Money blog cites sources like moneymorning.com and barons.com, putting the valuation around $7 billion pre-green shoe, or maybe even a staggering $18 billion post-IPO.
And you have to look at who's backing them, too. The analysis points out heavyweights like BlackRock, Fidelity.
Yeah, and VCs like Accel and General Catalyst, series players. What's truly fascinating here, though, and the One More Money blog emphasizes this, is the significance beyond just those impressive numbers. The timing itself is pretty critical. We're seeing regulatory headwinds softening a bit under the SEC's new leadership.
Right.
And there's emerging legislation like the Stable Act and the Genius Act. This could position Circle as one of the first really regulatory compliant standard bearers in the stablecoin space.
So a potential first mover advantage in terms of compliance.
Exactly. Legitimacy, oversight, that's a huge competitive edge if these regulations stick. But it's more than just regulation. This IPO signals a broader cultural shift, wouldn't you say?
Definitely. It means crypto-focused firms can now tap public capital, gain mainstream validation.
And the One More Money blog really views CRCL as a bellwether, a signal for future digital asset innovation in public markets. It's the first stablecoin stock.
Right, setting a precedent. Okay, so here's where it gets really interesting, because the One More Money blog meticulously breaks down Circle's business into four synergistic pillars. Understanding these seems absolutely crucial to grasping their growth dynamics and, well, their risk profile, too. First up, the powerhouse. Stablecoin dominance, mainly through USDC.
The big one.
Yeah. For anyone maybe less familiar, a stablecoin like USDC aims to hold a stable value, usually pegged to something like the US dollar. It's like a digital dollar. USDC currently has roughly $61 billion circulating, makes it the world's second largest after Tether's USDT, which is much bigger, around $153 billion.
True, but look at the volume.
Exactly. Get this. Its 30-day transaction volume recently topped an incredible $2.3 trillion. The One More Money blog highlights that this is on par with Visa.
That's massive real-world adoption right there.
It really is. And it accounted for 58% of total stablecoin trading volume, compared to just 35% for USDT. So more usage, even if supply is smaller.
Yeah, velocity matters.
Now, a critical insight from the One More Money blog about their revenue model. Circle invests customer deposits, the reserves backing USDC, in short-term U.S. treasuries. They generate what they call reserve income, and this is key. This reserve income comprised nearly 96% of their total Q1 2025 revenue.
Wow, 96%.
That's $579 million just from reserve income. Huge reliance there. Okay, moving to the second pillar, European expansion with EURC.
Their Euro stablecoin.
Right. As the largest issuer of EURC, Circle is positioned to potentially dominate the European market. The analysis suggests that if regulations like MiCA, that's Europe's big crypto regulation, continue to be enforced.
It seems likely.
Yeah, it could force competitors like Tether out of major European countries. That gives Circle a significant regulatory moat in Europe. Then pillar 3, tokenized yield with USYC.
This was interesting.
It is. The One More Money blog explains that USYC basically tokenizes short-term treasury holdings, so you get dollar stability plus interest.
Making it a potential alternative to traditional money market funds, but on the blockchain.
Exactly. USYC currently holds about 5.5% of the total tokenized treasuries market. And that market, get this, expanded an astonishing 400% year over year in Q1 2025.
400% growth in that niche. Wow.
Yeah, it really helps solidify Circle's stability plus yield offering. And finally, the fourth pillar, global payments with CPN, their cross-border payment network.
Trying to tackle Swift, basically.
Pretty much. The One More Money blog details how CPN enables real-time, low-cost global transfers using Circle stablecoins, bypassing all those inefficiencies and costs of traditional systems like Swift.
Think remittances, business payments. The potential for speed and cost savings is huge there.
Definitely a game changer for moving money globally if they can scale it.
So if we connect all these pillars, look at the big picture. The One More Money blog concludes, Circle's ecosystem is, well, pretty robust. You see these clear paths from the core stablecoin issuance to yield products to payment rails. It's integrated.
That integrated approach feels like a real strength, a comprehensive platform.
It is. However, the analysis also flags something important. While USDC's dominance is impressive, that heavy reliance on reserve income.
The 96% figure.
Exactly. It leaves them quite exposed to macro factors, especially interest rates.
Right. So the framework is strong, but the One More Money blog suggests long-term success really hinges on scaling USYC and CPN.
That's where the real diversification needs to come from, to lessen that dependence on T-bill yields.
Makes sense. Okay, so what does this all mean when we dive into the actual numbers? Let's look at the financials the One More Money blog presented from Q1 2025. Revenue for Q1 hit $578.6 million. That's a solid 59% year-over-year increase from about $365 million in Q1 2024.
Strong top-line growth.
Very. And get this. Their trailing 12-month, or TTM, revenue is now at an eye-popping $1.89 billion. That's a 983% leap over the prior 12 months.
Almost a tenfold increase TTM. Yeah. That's extraordinary.
It really is. Net income for Q1 was $64.8 million, up about 33% year over year. Looking at margins and cash flow, gross margin around 24%. TTM EBITDA is about $215 million, an 11.4% margin. And TTM free cash flow is around $300 million, a 16% margin.
So decent cash generation on that TTM basis.
Yeah, and the balance sheet is described as having a fortress-like foundation. $61 billion in cash and reserves, only $53 million in debt, incredibly strong financially.
That reserve number is basically the stablecoin backing, right?
Primarily, yes. Reflects the USDC in circulation. Now, profitability and valuation. This is where it gets tricky. The One More Money blog notes a somewhat slim TTM profit margin, around 1%.
Only 1% profit on nearly $2 billion in revenue.
Well, the Q1 operating margin was better, around 11%, suggesting maybe improving leverage. Diluted EPS is 0.30 cents on a $133 share price at the time of that analysis.
Okay.
For valuation, as we said, shares surged 168% on debut. They're currently around $152, which is roughly 60% above the IPO close price. The price-to-sales ratio is high, about 16.1x TTM revenue. The One More Money blog notes peers average around 13.4x.
So trading at a premium to peers.
Yes. And price to book is also substantial, 16 to 20x book value.
Expensive metrics.
And one more detail the One More Money blog points out, an Altman Z-score of 0.04. Now, for listeners, a low Altman Z-score, especially below 1.8, typically indicates increased bankruptcy risk if profitability falters.
0.04. That's extremely low. That highlights the risk if that interest income stream gets squeezed, doesn't it?
It certainly seems to flag that vulnerability.
So this raises a really important question for you, the listener. What does this blend tell us? You've got impressive growth, strong balance sheet, but also very high valuation metrics and this potential risk signal from the Z-score.
That's a complex picture.
Absolutely. And analyst sentiment reflects that. The One More Money blog mentions Wall Street Sen and Seeking Alpha identifying CRCL as potentially overvalued, though they do commend the financial strength. Stock Analysis initiated a buy with a $147 fair value target.
But then Zacks ranked it in the bottom half of its industry for near-term timeliness.
Right, a less optimistic take there. Yet Barron's, according to the blog, notes the regulatory openness and the strong earnings momentum more positively.
So a real mixed bag from analysts. Reflects the difficulty of valuing something this new, this disruptive.
Exactly. It's the bleeding edge of finance meeting public markets.
Of course, no deep dive is complete without looking at the challenges. The One More Money blog carefully lays out several key risks for investors. You alluded to one already.
Interest rate sensitivity, yeah.
That's huge.
It really is. With nearly all revenue coming from Treasury yields backing USDC, the analysis calculates that just a 25 basis point Fed rate cut, 0.25%,
Tiny move.
could strip around $100 million from quarterly EBITDA, unless, of course, that's offset by massive growth in USDC deposits.
That's a direct hit to the bottom line from something totally outside their control.
Exactly. Second risk, high fee dependence. The blog notes about 60% of that reserve income gets shared with partners like Coinbase.
Ouch. That really puts pressure on profitability. It does. The blog suggests only increased in-house adoption of CPN and USYC could maybe alleviate that burden over time, keep more revenue for themselves.
Makes sense. Need to capture more value internally.
Third, competitive threats. Okay, USDC is second globally, but Tether's USDT still dominates supply. And beyond Tether,
The field is getting crowded.
very formidable challengers popping up everywhere. PayPal, Block, traditional banks getting into digital assets, potential central bank digital currencies, CBDCs, and loads of emerging fintechs.
It's not a guaranteed win for Circle, even with their current position.
Definitely not. Fourth risk. Regulatory risk. We mentioned potential tailwinds, but legislation like Stable, Genius, MICA, CBDC frameworks, it all poses uncertainty.
Regulation can be a double-edged sword.
Precisely. While the One More Money blog notes clarity is growing, any unexpected reversal or unfavorable rules could disproportionately hurt Circle. And finally, valuation risk. We touched on this. Those high multiples mean the market has set some very lofty expectations.
Huge expectations baked into that $150 plus share price.
Yeah. Unless Circle significantly diversifies revenue beyond just USDC reserve income, any disappointments could prompt sharp sell-offs. That Altman Z-score and those expensive metrics really underscore this risk. Caution advised there.
So a lot to weigh up.
Indeed. So after all that, is Circle stock a good investment? The One More Money blog gives a nuanced verdict, looking at the upside, the warnings, and ideal investor types. Upside. Clear dominance in stablecoins, USDC adoption is mainstream. They're a leading issuer of compliant digital dollars. The reserve model is capital light, potentially high margin, and those regulatory tailwinds could help entrench their leadership.
The bull case is strong, based on adoption and compliance.
But the warning signs are clear too. Macro risk, recession, rate cuts hitting yield or stablecoin use, partner reliance, that revenue sharing eats into profits. And the competitor and regulatory threats are always looming.
A balanced view of pros and cons.
Yeah. And the One More Money blog outlines who CRCL might be for. Short-term traders, maybe play momentum, ETF hype, but use strict risk limits.
High risk, high potential reward there.
Medium-term investors. The analysis suggests watching USYC and CPN adoption closely. Look for real signs of revenue diversification in upcoming earnings.
Need proof the other pillars are growing.
Exactly. And long-term investors. The advice is maybe wait. Wait for sustained margin improvement, more regulatory clarity, and proven resilience to macro shifts before committing heavily.
Patience might be key for the long haul.
So the One More Money blog's final verdict is nuanced. It's a yes for traders bullish on digital currency adoption and interest rate stability, but perhaps a maybe for medium to long-term folks still skeptical about the valuation and those macro trends. It's solid if they succeed in diversifying income.
So to summarize the strategic takeaways from the One More Money blog for investors, it really boils down to your time horizon and risk appetite. For the short term, yeah, leverage momentum, ETF flows, but always set those risk limits. Protect your downside.
Crucial.
For a medium-term approach, the recommendation is definitely wait for Q2, Q3 earnings. You need to see tangible traction in USYC and CPN. That's the proof point for diversification.
Show, don't just tell.
Right. And for long-term discipline, the guidance is monitored diligently. Look for sustained margin improvement, more regulatory clarity, and real evidence they're diversifying income away from just those USDC reserve yields. It's a measured, cautious approach for a dynamic asset in a very fast-moving market.
That was an incredible deep dive into Circle's CRCL stock, and huge thanks to the thorough analysis from the One More Money blog for laying it all out. We've seen the immense potential here, but also the very real risks in this emerging space, this convergence of blockchain and traditional finance. It really is a new frontier, and Circle is clearly right at the forefront.
What really stands out to me is how Circle, being the first publicly traded stablecoin issuer, acts as this litmus test, a real test for mainstream acceptance of digital assets. So the question for you, the listener, isn't just about the financials, but how Circle's success or its challenges could fundamentally shape the future of digital currency in our everyday lives. Something to think about.
Definitely something to think about. Thank you for joining us on this deep dive. Now, just a quick reminder, this discussion was based on the analysis from the One More Money blog, and it's purely for informational purposes. It is not financial advice. You should always do your own research or consult with a qualified financial professional before making any investment decisions. Please be smart about it. Thank you for watching. If you're interested in U.S. stock investment and want to stay on top of the latest insights like these, be sure to subscribe to the One More Stock channel. That way you won't miss out on future videos. Also, please give this video a like if you found it helpful and leave a comment below. Let us know what you think about this topic. Circle, CRCL, can you buy it or not? Your feedback really helps us understand what matters most to you.